Hello guys, it's Chris from the tradingexchange.co.uk, and this next video in the series of tutorial videos will be to do with Bollinger Bands. Okay, so we've got another DAX chart in front of me here, which is quite interesting because I've got a trade open on this one at the moment, which is doing alright. Hopefully it will continue going the same way. So we're going to have a look at applying a Bollinger Band on this particular chart, just simply because I've got a trade open on it at the moment. So Bollinger Bands are just another technical tool that you can use in the box that will allow you to figure out where there's an opportunity to get into a trade. Okay, so there's lots of different analogies to kind of explain how this works, but in this particular example, we've already looked at moving averages before. This kind of does utilize moving averages with one other mathematical tool. Apologies to those out there who are not mathematically minded, but which is standard deviations. And so what it does is it plots a moving average, whatever size you want, and then it provides a range around that moving average based on a couple of standard deviations. So it just allows you like a channel, like a dynamic channel that runs around a moving average. Okay, so let's have a look and see it in a bit more detail. Now, Bollinger Bands were originally created by John Bollinger. That's where the name comes from. So it sounds quite complicated, but it's really just a surname. And you might not necessarily use this tool all the time. You might use it with other things as well. But they're great when used properly. So what it's ultimately going to do, if I just have a look on MarketScope first of all, by looking up the indicator window, it's one of the most recent ones I've used. So it's here. If it's not there, you can just type Bollinger, or the first few letters of Bollinger, and it will appear there. Double click. That will bring up the dialog box. And there's really only two settings you need to change, which would be the number of periods, which is a moving average, and the number of standard deviations. So how wide do you want the channel? Maybe put it up to a maximum of 3. Don't think you're really going to need to go much further than 3. You probably want it to be at least 1. Any smaller than that might not be worth having. Okay, so for this case, let's just go with the standard amounts, 20 and 2. Okay, let's just press OK, and there it is. Bit messy. I've got a couple of moving averages on here from a previous video, so I'm just going to remove them. Right click on them. Oh, wrong one. That one. Remove that. There we go. It's tidied up a little bit. Okay, so you'll notice a couple of things. First of all, you've got this massive wide ranging room here, and you've got this really narrow sort of channel here. So when it's quiet around here, there's not a lot going on. And what I often tend to refer to these as is they're pinched. It's like you've kind of gone over there and just pinched the bands really close to the price. It's pinched all in. That normally tends to signal a breakout. And a breakout is this, boom, you've got this massive gap, creates this really wide space where it's just lots of volatility. You just want to try and avoid those areas where you can, because it's just all over the place. Wait till it starts to calm down a little bit. And the way that you can trade Bollinger Bands will be one of two ways, really. You can either trade what's called a Bollinger Bounce, or you can trade a Bollinger Ride. And I'm hoping right now we're in the middle of witnessing a Bollinger Ride, which would be great for me personally. I would like that a lot. And a Bollinger Ride just means it just rides down the wave of the band. So it looks like it's touched, which could provide a bounce. But instead of bouncing, it actually just continues to ride it down and down, and it just gets wider and wider and wider. So a bounce would be like, for example, up here. So when trading has got just a little bit too stretched outside the normal expected levels, you would get these kinds of movements. I just wonder whether I might just get out of this. There we go, done. It's probably going to continue falling further, and if it does, so be it, but whatever. Okay, so you'll find that a bounce happens because price has kind of got to a point where it's outside of its normal expected amount, its normal expected level. So it's gone touch the levels. It's outside 2 standard deviations, which is the sort of generally expected level that it will get to, and it comes back down again. Reaches the bottom part of it, and it comes back up again. Reaches the top, comes back down again, and it just bounces through the levels. And they provide really, really useful entry and exit tools for a trader to get in and out of a trade. The only thing to be careful of with Bollinger Bands is that you might enter into a trade thinking, oh, I'm going to get a bounce, and instead you get a ride. So always set stop losses, because you can really get caught out quite a lot on that tool. If this bounces, you would think, well, where's it going to bounce to? And let's just assume that this is a bounce, which means like a boss, I got out at the right time. Let's hope it's that. Then you would perhaps expect for it to be bouncing up towards this moving average line, or the center line, the median line, whatever you want to call it, which is the main moving average, 20 periods we've done. It normally tends to revert to that, mean reversion it's called. It just comes back up to that again before perhaps heading even further down again. Okay, so a bounce could do that. So if you're thinking, well, where's my exit point? Somewhere towards the center line would be good. Where's your profit target? Well, that's kind of up to you. Where would you set your profit target for getting into a trade like that? You could use a trailing stop, or you could just set a pip target. It's kind of up to you. But in terms of strategy, we'll look at that in another video. So that's really all a Bollinger Bounce is, or sorry, a Bollinger Band is. It's just a channel where price will generally tend to trade, where if you get to the top of the channel, you can sell it. If you get to the bottom of the channel, you can buy it, unless you get a bounce. Unless you get a ride, should I say. Fortunately for me, this candle looks a little bit nasty. So we've got a couple of minutes left on it. It could go anywhere. But I'm quite pleased with where I got out. We'll see how that ends up. Anyways, I hope that makes a bit of sense. I'll be back with another video.